Hey guys, this is your girl Paula, the queen from Queens. These are money minutes that matter. Today, we're going to delve into the world of loans, a topic that is essential for anyone looking to borrow money for any purpose. Let's explore some common types of loans and understand how they work. Although my mantra is to be debt-free, I always preach that debt is a disease. I also know that you have to be in the best prepared possible position to optimize any opportunities, meaning you need to get the best rates. I've never bought a new car in cash. I've never bought a home in cash. Neither have I ever had interest of 10, 15, or 20%. I'm prepared. When I need to get a loan, I'm ready. I walk away if the deal doesn't work for me. So first up, let's deal with getting a mortgage. This loan is used to finance the purchase of real estate. This can be a home that you're living in or an investment property. With a mortgage loan, borrowers receive a lump sum of money from a lender to purchase a property. The loan is then secured by the property itself. This means that if the borrower fails, the borrower being you, fails to repay the loan according to the agreed upon terms, the lender has the right to foreclose on the property. Now, let's talk about home equity loans. These loans allow homeowners to borrow against the equity that they've built up in their home. Equity is the difference between the current market value and the amount that you still owe on the home. Let's just say you bought a home for $300,000. And now the equity has increased and it's worth $424,000. That $124,000 is now your equity. An equity home loan typically is fixed. It has fixed interest rates oftentimes, and it oftentimes has a fixed amount of installments. It should be used only for major expenses. To be honest with you, I don't encourage people to consolidate their debt or to make big purchases using the equity within their home. This should be only for the most dire emergencies. Unfortunately, we need to talk about the cost of college. College is far-reaching for many of us. Student loans are a common form of financial aid. People don't understand that. Student loans is a part of your financial aid package, along with scholarships and grants and college work study. They are used to pay for higher education expenses, such as tuition, fees, and living expenses. Student loans come in two main types: federal loans, which are funded by the government and offer various borrower protections and repayment options. And then you have private loans, which are offered by almost anyone: banks, credit unions, and other lenders. Everyone wants to finance your student loans. The federal government, banks, credit card companies, and social media companies. Why? Because it's guaranteed money. It's important that you be careful and consider the terms and conditions of student loans, as they can be long-term and the implications can last for 10, 15, even 20 years. It'll impact your debt to asset ratio. It'll impact your interest rates when you try to buy a home. Think about it. If you have to pay a student loan debt of, let's say, $1,000 a month, and you have a family now and you want to go to Disney World, because you have this loan that's far-reaching, maybe you can't afford to go to Disney World because you need to pay off this debt. You have to think about the long-term implications. Now we've talked about home equity lines of credit. We talked about student loans. Let's deal with the biggie: automobile loans. Who here wants a nice fancy car with all the bells and whistles? I do. As a matter of fact, I want a car that's going to drive me to work by itself. I don't want you to be in a position where you're not empowered. I want you to walk into a dealership empowered. Loans for cars are used to finance the vehicle. Just like a mortgage loan, the auto loans are secured by the vehicle itself, which serves as collateral for the loan. Auto loans can be contained from a bank, a credit union, or the dealership. And typically, they're fixed installment payments, and the interest rates are oftentimes fixed. When you're shopping for an auto loan, it's essential that you compare offers from multiple lenders, including the dealers, and find out who has the best rates and terms. A friend called me last week because she was told she can get a friends and family discount at a local dealership. She was smart. She secured a loan from her credit union, but the dealer told her if she didn't use their financing, then she wouldn't get any of the incentives. She called me. We looked at her choices, we looked at her options, and guess what? The dealer became the loser because she bought a different car from a different manufacturer. She was empowered and she got the better rates. Now, this is just an overview of some of the common types of loans. Mortgage loans, home equity loans, student loans, automobile loans. Whether you're buying a home, funding your education, or purchasing a vehicle, understand the different types of loans available. This can help you to make an informed decision. I am always here to help you in your planning process. Always remember, whoever finances you, they'll make money off of you. So you're in the driver's seat. You choose them, not vice versa. Remember to join me live Wednesday, April 24th to get your mortgage and home buying questions answered by my friend Trina Hayes. April 24th, 7:30 p.m. live. This is your girl Paula. I love you. Visit my website, robertstargetfinancials.com. Follow me on all my social channels and have an amazing day.